Welcome to the Northern Virginia MarketWatch, brought to you by Real Estate Business Intelligence, an MRIS company. Let's take a look at the most recent activity in the Northern Virginia housing market, which includes these areas. In February, the signs in the U.S. economy were a mix of positive and uncertain. There were 236,000 jobs added in February, better than forecasters had predicted. The unemployment rate fell to 7.7%, and the drop was due mostly to people finding work as opposed to dropping out of the labor force. Home prices across the country continue to rise, and the inventory of homes for sale is at its lowest level in 13 years. Demand remains robust, and the outlook for the housing market is strong nationally. Despite these positive economic signs, the mandatory federal spending cuts of sequestration and the congressional battle over the budget continue to fan the flames of uncertainty. By the end of March, Congress and the President must approve federal spending levels for the remainder of the fiscal year. It's unclear how the sequestration cuts will be incorporated in the final budget numbers, but the D.C., Virginia, and Maryland economies could be disproportionately affected. There were 1,900 sales in the Northern Virginia region housing market in February, 4% higher than this time last year. This is the highest February sales total the region has seen in 4 years. Despite that sales growth, new pending contracts continue to lag relative to last year. There were 2,933 new contracts in February, 3% below last year, the fourth consecutive month of decline. There were 4,185 active listings at the end of February, over 1,600 lower than this time last year. New listings are also down, falling 5.5% from last year's level. At $380,000, the median sales price for the Northern Virginia housing market is up 14% from February 2012, an increase of $47,000. This is the sharpest gain for any month in nearly 3 years. The low supply of active listings is not only putting upward pressure on the median sale price, but also influencing the time on market. At 24 days, the median days on market is down 18 days from this time last year. As we enter the spring market, economic uncertainty continues to linger, particularly in this region due to the federal employment presence. Despite these unknowns, the pent-up demand in the market will likely lead to stable growth in the coming months relative to last year due to the low inventory of homes for sale in the region. That's the Northern Virginia Market Watch for this month. Check back next month for the latest.